let's discuss investing in yourself. So, a number of you, or all of you, have invested in yourself regarding learning how to at least supplement your income by joining the Dorian Way. But believe it or not, that's just one step. The more important step after that is to put in the time to learn.
Please subscribe to our and happy charity, major coins.
I think once you join the Dorian Way, you should jump into studying as much as you can because we have so much information to help you be able to invest in yourself. Right? So if you want to learn how to do short-term trades, what we consider 0 to 14 days to expiration, right? Those are short-term trades that have a lot of short-term risks or gamma risks, directional risks. And then we have what we call our bread and butter, that is 30 to the 60 days. That's more of our swing type of trade. Then we have what Ernie specializes in for us, and that's the long dated option trading, and that's usually a year or more out, and that's super safe, and you can make incredible returns. But it's a learning process with that strategy as well. And then one of the last strategies we have that we kind of push is our safeguard strategy, and we call that our buy and hold strategy, but with that's more on steroids. It's a buy and hold process that gives you a better overall cost basis over time. And and so we teach these different type of strategies. You have to figure out what works for you, what fits your temperament best. Right? And that's sometimes it's playing around, right? It's putting in that education. It's doing some short term stuff. It's doing some swing. It's doing some long term. All right, so you have to figure out what works best for you, and sometimes it takes a second, right? Sometimes you have to pay some education, right? Pay some tuition of what fits you best for your temperament. I know when I started trading years ago, I tried penny stocks, and I realized very early on that short-term trading just didn't fit my temperament. I do a lot more now, but it's not naturally something for me. I've got a lot better at it and so forth, and I don't panic with these demonstration accounts for it. But it's still all about investing in yourself, putting in the time to learn what works for you, and then learning it at a high level. And you can always simplify things. So, for example purposes, let's just say that you wanted to do short-term trades, right? And you start off by doing something that is 7 days to expiration or 14 days to expiration. That's perfectly fine, and I encourage you to do that if you want to test out the short-term trades first. You do not want to start, in my opinion, and this is something we've learned over the last year and so forth, with the zero DTE trades. You can work yourself up to that, but you have to understand it first and understand how to adjust what's going to happen when something goes wrong. And if you're doing something that's 7 or 14 days out, it's going to give you a little more time, right? And as you get more comfortable with the process, you can slowly start to get closer and closer to that zero DT, and then you can start doing it, and maybe it really fits your temperament, and you love it, right? You can make it a ton. You can make the most percentage wise, in my opinion, from zero DTE, but you can also lose the most percentage wise from zero DTE because the gamma risk. But you work your way there, and I just say that you got to the point where you decided that you wanted to do a one DTE trade, right? And you wanted to make it as safe as possible one DTE. You have overnight risk, but if a problem occurs, you could learn how to roll it out. So that just say, for example purposes, you had a one DTE trade on that was now a zero DTE trade, and it was right down. It was like less than 30 minutes to go, and this is your trade 20 points wide. Okay, and you had to buy this back. Well, if you bought this back, and let's say you decided you were going to roll it out 7 days, and if you roll this out 7 days, and let's say you decided I wanted to go really far out, and I wanted to put this back at a really nice delta. Well, this is a 7 delta, and we're going to get the 20 point right because the strikes here. So let's do the 20 point right here. Well, if you did this would already be for a credit, right? And you just reposition the trade in out 7 days and give yourself a lot more wiggle room to be able to deal with the trade. But if you don't know how to adjust like this, then this would be a problem, right? You would be sitting on your trade here with a few minutes to go, betting or nervous, hoping that this stays out of the money, right? So you don't have to pay any money. So we just got 90% on that trade, everyone. We said that we were bet that this market would drop a decent amount and then volatility would increase because the 1 day or the zero DT volatility, and we'd be able to get that 90% on that trade. So that was a nice little directional play. We let it play out, and it worked out for us. All right. So, but in this example here, this is saying a 28 delta, and that might be right, but look how close you are to at the money, and it's less than 4 points away from at the money, and if it shoots up, then you can have a problem with this trade. Obviously, the market is going in the other direction now, but you don't want to be sitting and biting your nails hoping it stays out of the money in this scenario. You have to understand how to adjust these. What you're going to do when something goes wrong, and you can't have that. You can't come up with that process while you're in the trade. That should be before you even put on the trade what you will do if something goes wrong, right? How you're going to take profits, and most importantly, how what you're going to do if something goes wrong. You can't put it on and then just hope that it goes well and then have no exit strategy, no defense when it goes poorly, because it eventually go poorly. No one survives zero DTE trading without issues eventually, right? Without issues eventually. So you want to know, you want to be able to know what you're going to do. In this example, we're going to do a 1DT trade this afternoon. But normally, if you're new, you want to do a 7 or 10 or 14 days to expiration if you're doing these short-term trades, because it's going to give you more cushion. Okay? It's going to give you more cushion. And if something starts to go wrong, let's say you do something at a 5 delta, and a few days later it's at a 35 delta, well, you still have some time and you can roll it out, right? You can reposition it, put it back at a very high probability, give yourself another 80% probability, and then let this and then let the probabilities play out. Okay? And but you want to do these small, right? You want to do these small. So for example purposes, let's just say that I had a trade on that was this, and it was 20 points wide, and it's costing me $430 to do this call side by itself. The put side is probably going to be worth zero at this point, or very, very little. Okay. And let's say it's going to cost me 430. So if I decide that I'm going to roll this out, right? And as I say, I decide I'm going to once again roll it out 7 days. And if I roll this out 7 days, and I say I want to reposition this and go to another high delta. So let's just say I decided, low delta or high probability of winning. If I go to this 10 delta here, you can see that now this is going to be it's still going to be a debit for me, $275. Well, if I did this small, I might be able to add another contract here, right? And if I added another contract here, this is still not enough, right? It's only 130. But keep in mind, if you're doing these short-term trades, we primarily say do an iron condor. So we could put the other side on and easily get that 110, because we would put on two contracts, maybe no higher than the 10 delta, and we'll be able to reposition the trade. And then if you have a 10 and a 10, you add those up on the iron condor. That's going to still give you an 80% chance of winning. So at expiration, so that's giving you a high probability of winning after you adjusted it. Okay? So that's why you want to trade these things small, so you can have that wiggle room to be able to fix things that go wrong, because things are going to go wrong. You have to think about what could go wrong beforehand, right? Beforehand. All right, so let's look at this 1DT trade, and let's see. The market has been strong, and so I would bet that we're going to be a little bit less strong tomorrow. Just a bet. I thought I would be 100% correct if the market stayed green. It's you can argue that it's still green. This is fraudulent. So if we're going to do this type of trade and try to and once again invest in ourselves to make consistent income, then you want to make it so that it's a very, very high probability that you win on this. So sometime you can set it that you want to receive at least $100. Sometimes you can say, okay, it's one day, I'm okay with getting $50 or $75. It doesn't have to be a huge amount, but you do want to have a super high probability of winning on the trade. So if I went here and I decided that I was going to do the 42.10 here, and if I did a 10-point wide spread, that would give me $35 on the call side. And then let's say on the put side, I decided that I also wanted to do a 5 delta, and I went here and I did a 10-point wide. Well, this is giving me $50 over in the next one day, and it would have to the expected move that TastyTrade is saying is about $18. Let's just say it's 20. So that's move. Then let's say the 2 times expected move is 40. So if we take what is currently trading out on the SPX, that 41.67 minus 40, that'll take us to 41.21. Right. So on the put side, we are at the 41.15. So that's more than 2 times the expected move. On the call side, 41.67 plus 40, that'll take us to 42.07. And that we're more than 2 times the expected move there. Right. So let's just say that that $50 wasn't enough, or we had enough of account size to do a little bit more, and we wanted to do 15-point wide. Well, that's only $55, right? That's only gave us $5 more on that put side, and then on this call side, so we got $10 more for $1,000 more of risk, right? So it's not attractive, but this is the trade. So let's look at this, and this is the trade we're going to do, and we'll talk about it a little bit more. But the market has just jumped up a little bit again, so I like that, and let's see if we can get this 65 cents. And we probably can get more than that, 70 cents, but let's do this. I like it. I think that 42.10 is good on the call side. I think this 41.15 is good on the put side for one day. We will see. We got about less than 15 minutes, about 14 minutes left in the market. Let's give it just a second, but I'm going to go over here and kind of put it in a different way, similar order, and I just want to break it down so you guys can understand. We already indicated that we're more than two times the expected move away, and if we do the VIX, the VIX amount, the rule of 16, and if we take that, let's just say 1613 divided by 16, that's going to be just about a 1% return percent move that the market is expecting to happen tomorrow. So 1% up or 1% down. And if we kind of figure out how far are we away on the call side percentage wise, so if we take the 42.10 minus what's currently trading at 41.70 divided by 41.70, that is about 1%, just a tiny bit under 1%, but I just say that semantics is 1% on the call side. This put side is going to be further away. And so what we're doing is taking this short strike minus this last price divided by this last price. So we're taking 41.15 minus the 41.70 divided by the 41.70, and you get a 1.3% on the put side. And we've been going up a lot. So I like that this market is going up again right this second, because that gives me more conviction that we're not going to go up a significant amount tomorrow. Doesn't mean that won't be the case. That's my speculation. We went up a lot Thursday, went up a lot Friday, and we're up again today. Even though it's small, we're still up again. And so that to me is an indication that if we're going to have any type of decent sized move, I think it would be to the downside tomorrow. So hopefully we get filled any second now as this market kind of moves up a little bit, because we're less than 1% technically away from them on the call side, but we have only about 12 minutes to go. So we need this to ring the register any second now. I'm going to give it one more minute, and then if we get filled, then great. If not, we're going to have to make a tiny bit of an adjustment to be able to get the price that we want. We might go down to $60, but I really don't want to do that. Would love to get that at least to 65. And that put side is a 4 delta. We do have some room to move up that put side, so that's what we're probably going to do. And all right, so let's do it now. And I'm going to cancel this for a second, and I'm going to go back in and do a similar order. That's how you have to do it on TastyTrade. And if I move this up here, and that's going to give us $70, and let's see if we get it, and we send that, and then it's just not giving you field on the mid, right? But 40 points, 4170 minus 40 is still 4130, so we're still further than the 2 times the expected move. If we did that 4120, they're not going to give it to us there, and so that's unfortunate. But if we drop this down to 65, then we probably get it, right? So that's what we're going to do, and there we go. All right, so this is the trade. You can see that we are a decent amount away on both sides, and we'll see how it plays out. But this is the trade. What we're going to try to get is 70 to 80% of that 65. It's not a lot of money absolute wise, but it all depends on your percentage, right? So 65 times, let's just say 70%, that would be 45.50. So that's not bad if we want to get that 70%. Okay? All right, so just going back into investing in yourself. Put in the time to learn the trading process, and it will pay huge dividends. It's just like if you put in time to exercise and try to get in the best type of shape that you can possibly be in, that pays dividends, right? And when you're going through the schooling process, right? And if you're trying to learn how to be an engineer of whatever sort, that's investing in yourself. You have to go through the process and learn it. I'm not saying that you have to go through a 4-year college process again to be able to learn to supplement your income. No, it shouldn't take that long. But you can't expect just to listen to me talk and see me push buttons and so forth, and you willy-nilly push buttons, and that you're going to learn how to make a consistent income. It just doesn't work that way. You have to put in a lot more time, and you have to be really vigilant about the process.